Pure play asset management companies, Reliance Nippon or Nippon Life AMC now as it is called, for example, it touched a new high on Tuesday and largely has remained buoyant. While corporate earnings were one trigger for the AMC players, the January AMFI data has provided another leg to rally, and let me try and explain why. Now just look at what these stocks have done in the last few days, and while they have been steady over the last 3 days, there was a bit of a surge which took Reliance Nippon Asset Management to all-time high levels, which took HDFC AMC back to those 3350, 3400 levels. So there was a bit of a surge into these AMC names in the last few days for sure. Now, aside of the numbers that they both of them clocked, which was very good, the flow of equity funds, and why I think is particularly important is this. Now just look at the data for November, December and January, and you will see that there was an uptick in almost all the equity linked components. So large cap equity funds showed an uptick, decent numbers there, but look at the mid caps and look at the small cap numbers, especially in the month of January 2020, wherein the mid cap numbers were about 1798, the highest in the year thus far. The small cap number was 1073, which is amongst the highest levels this year. There were a couple of months which were high, but as a trend, I think this was the highest number in lieu with the mid cap space. And the multi cap funds as well had a very high number in this month, which is 1722. So all in all equity linked funds actually got higher inflows. And why is this important? There's a Goldman Sachs note which says that the steady rise in the net new SIP registrations lends a strong support to domestic flows and likely to see a continued pickup in domestic equity flows as economic growth improves in the coming months. Now remember why this is important, because equity funds or equity exposure or equity flows into mutual funds gives them a bigger bang for the buck in terms of the earnings, and that's why AMCs with a higher equity percentage of profile tend to gain more. Let me try and illustrate this. Reliance Nippon or Nippon Life Asset Management Q3 highlight, if you saw, there was an increase in equity mix, yes, but it was negated by a 7% quarter-on-quarter decline in the debt AUM, and PAT was driven by higher MTM gains on equity portfolio. So if indeed the equity portfolio is driving gains, and then if the equity portfolio is seeing more money coming in, you would want to presume that the bottom line performance of these funds would actually improve. And therefore, while the price to earning multiple for Reliance Nippon or Nippon Life Asset Management would be higher than what it has ever been, I think the market seems to be liking it, and which is why it's willing to pay this premium. Look at HDFC AMC, for example. Q3, there was a lower growth in actively managed equity AUM, but the long tenor SIP book mix was higher on a quarter-on-quarter basis in favor of the equity linked funds, and as a result of which, if indeed HDFC AMC is able to maintain its equity exposure on the equity funds, it's by far the highest, then the market will be willing to pay the premium that it is paying. So these two did very well. There was also some surge and then a pullback into Motilal Oswal and Aditya Birla, because they are not just on the basis of their asset management business, which of course for MOSL, for example, did very well. For Aditya Birla, it was okay, but the other businesses dragged down. So when you look at the asset management companies, somehow the market is veering towards the pure play asset management companies as opposed to a Motilal Oswal or Aditya Birla Capital for sure. MOSL has still gained a little bit in the last few months, but Aditya Birla Capital has stayed at these sub 100 levels now for a while. It goes up and then tends to pull back a bit. So the higher equity mix, and arguably if that continues, then brokerages like Goldman Sachs, for example, believe that should only augur well for the asset management companies. Let's wait and watch if there is more gains in store for some of these.